Hello, my dear friends. My name is Avilash, and I'm a full-time trader by profession. I've started this channel recently where I share my daily market analysis on the stock markets of USA, UK, and Canada, and also share my daily analysis on the currency pairs like Euro USD, USD Japanese Yen, GBP USD, and many more. So today in this video, I'll be sharing 10 day trading tips, 10 day trading tips from my own personal experience for every beginner. Okay, so the first tip is choose liquid stocks. As we all know, day trading involves buying and selling of stocks on the same day before the closing of the market. That is, squaring of positions on the same day. However, to execute these buy and sell orders, the exchange must have sufficient liquidity in the market. Therefore, the first tip for day trading is to avoid small stocks or penny stocks that may not be liquid enough. In case of illiquid stocks, the square of order may not get executed, ultimately forcing you to take delivery of the stock. Furthermore, experts recommend in diversifying the day trading positions across different sectors instead of investing all the capital in a single stock. So, this is the first tip. The second tip is fix the entry and exit price. Okay, so many stock traders suffer from buyer's fallacy. That's a condition when the buyer immediately changes his mind after the purchase. Okay, the buyer suddenly regrets after the purchase, feeling that his stock selection was not good enough, and he believes that it will go down or it will go against him. Okay, as a result, due to lack of confidence and dicey state of mind, they take wrong decisions during the order execution time also. Even I also face the same problem. Okay, so to avoid this kind of confusion, all you need to do is follow the second tip. Okay, second tip that you need to do before taking a position. Okay, what you need to do is fix the entry price and the exit price before the order execution. Okay, so that you do not deviate yourself from the confusion. Okay, so that once you execute the order, just move away. And the next tip is, or the third tip is, never compromise with the stop loss. It is quite common that the stock market or forex market that you have been trading, once you execute the order or once you buy, okay, after a few minutes you see that it is going against your trade. Okay, so it is very important for a trader to decide the stop loss according to the chart and his capital size. Okay, it is very essential. Okay, because every trader must know and must be ready with a notion that his trade can go against him. I have lost many trades. I have lost huge amount of money because I had no idea how to put the stop loss. Okay, stop loss acts as a safety net and helps traders to minimize their losses. Most experts throughout the globe would suggest stop loss as the most important day trading tip. So this is the third trading tip, that you should always use a stop loss. Okay. And if you're a beginner, it is ideal to go with 1:2 or 1:3 risk to reward ratio, where 1 is the risk and 2 or 3 is the reward. Okay. So book profit when the target is achieved or reached. Okay, this is your fourth tip. The secret to successful day trading lies in the high margin and high leverage that day traders enjoy. Leverage and margins are like double-edged sword. Okay, they are very dangerous. So, but traders should control them. So they should know how to control their emotions. Okay, they should not be feeling greedy. So they should avoid falling into the traps. Okay, when you see that your target is achieved, okay, just come out of it. Okay, you have achieved your target. Okay, because there are multiple occasions in the market where you see that you are in profit. Okay, your target is achieved, but due to your own greed, after some time you see that the curve has reversed and your profit is now in loss. Okay, so better secure your profit first. If you know how to trail the stop loss, that's a good thing. And if you're a beginner, you don't know how to trail the stop loss, then just book your profit and come out. Okay, and the fifth point is always close all your open positions. Okay, And but this is very important that you should always close your open positions if you're a day trader. Many day traders take delivery of the stock if the stock price or target is not met. Okay, and if the trade goes against them, this is not a good strategy for day trading. If you're a day trader, then you should close all your positions. A stock may be volatile today, but it may be dull tomorrow. And the stock, see, you have bought the stock analyzing the chart for today, but you have not analyzed the chart for the next 1 week or 2 weeks or 1 month. Okay, so and you also don't know the fundamental strength of the stock, so your trade may go against you in the long run as well. So it is very essential for day traders to close your positions on the same day. And sixth point is, do not challenge the market. It is nearly impossible to predict the market. Okay, so often we may find already required and necessary factors, okay, that indicate that market will be bullish today, and accordingly we take the buy position on the market. But the market decided or decides to disagree to all the factors and market goes against us. So it is very essential for a trader to have flexibility, okay, and not to get married to your own analysis. If the market goes against your analysis and stock hits your stop loss, or your currency hits your stop loss, okay, then do not cry. Okay, a, being a day trader, you should know, okay, how to book your losses. That's why stop loss is essential. That's why you should know how to calculate your position size. I'll be teaching you how to calculate position size according to your own capital, so that if your trades go against you, still you can stay afloat on the market. Okay, so the seventh tip is, research your target companies thoroughly. Okay, this is the seventh important tip that you need to focus on in case of stocks also. And if you're trading on currency pair, then you should know or have proper information on the currency pair. If you're trading on Euro USD, then you should know about Euro USD. If you're trading on Tesla, then you should know how the fundamentals of Tesla little bit. Okay, so keep your because keeping your eyes on few stocks or few currency pairs is enough. You don't need to keep your eyes on everywhere. Okay, that's why you need to have proper information on the stocks and pairs that you mainly focus on. And because once you have filtered the stocks and their currency pairs for you, uh, they become like your friends. Okay, they become your friends for years. Hence you should have proper information on their acquisition, mergers, bonus shares, stock split, dividend payment, etc. Okay, they are very essential. So this eighth point is timing. Timing is very crucial. Okay, so one of the most important decision of a day trader's life is the timing of a trade. If you are a beginner, and you should know how to position your size, or what is the position size, the chart that you should be using. Okay, the first 1 hour of the volatility, the first 1 hour of the market is very volatile. Okay, therefore day traders generally prefer to take trade after 1 hour. And if you're a beginner, then you should not trade during the first 1 hour. Wait for 1 hour. Okay, let the market settle down a little bit, then you should go for a trade. Okay, and this is the ninth point. You should always choose the right trading platform. Okay, because see, you need to make frequent transaction, frequent order place and all. Okay, and therefore your trading platform should be easy enough, and should not be very much complicated. Okay, and it should always have low brokerage and taxes. Next important point is time analysis. Okay, and this is very important. And also the last point, you should always careful while choosing a time frame, especially if you're a beginner. Okay, extremely lower time frames like 1 minute is very unreliable because of high market noise, whereas time frames like 1 day or 1 week is extremely slow for a day trader. So you should know which time frame you should use. Being a day trader, 5 minutes to 30 minutes is ideal. Okay, if you are planning to open close your position or square off your position within the same day, then you should always go for 5 to 30 minutes only. Okay, multi-time frame analysis is a different chapter, but your primary time frame of a day trader should be not more than 30 minutes. Okay, so these are the 10 tips. Hopefully you have liked the video, so give a thumbs up and subscribe to my channel. Thank you so much.